From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 18th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. And of course, most of all, it is always important to use appropriate risk management strategies in all trade setups. Here on the USDCHF, the dollar franc, we're looking at the daily time frame. We've seen the market a little bit back and forth over the past couple of weeks. We saw a significant dip all the way down here, 97.50s, mid-97s, a sudden rally all the way back up into the 99s again, and then we saw the market fall back last week and then come right back up. So it's been a little bit of a back and forth market here for the dollar franc right now. Well, end of last week, we saw a nice little rally from the 98.35 or so level all the way back up into the low 99s. Now we're seeing a little bit of a pullback once again back into the upper 98s. The key area that we'll be looking at is this purple shaded area, 98.80, 98.95. Let's go ahead and zoom it in on that a little bit. And as you can see, the market's been below it, above it. So when the market is underneath it, there's this tendency for it to go all the way back down to the orange zone, which is at 98.50 level. If it gets above the purple shaded area, of course, then there's this tendency for it to head back up to the blue zone. That's what's been happening for the past couple of weeks. So under 98.50, there's a possibility we look for opportunities to go short towards 98.50, and then of course if that trend continues, we look for it to continue to go down, possibly all the way down to 9800. Now, the risk there underneath 98.80 is that it gets back above 98.95, 99, and goes back to the blue zone. So stop losses should be appropriate above the purple zone if you go short underneath it. And then, of course, if it turns around and gets back above and you go long, stop losses would be underneath it. Let's take it down to the 4-hour time frame, see if that changes our analysis any. I don't think it does. I mean, we saw the market find resistance, finally got above it, went to the blue zone. We're coming back down. We're challenging underneath it. Any open and close underneath 98.80 could produce the next fall down to the orange shaded area for the dollar franc this week. Let's move on over to the EURUSD euro versus the US dollar. First thing I want to point out are all the black boxes you see here on the chart. 1, 2, 3, 4, 5 times. We've seen the market kind of in a range or congestion between the green and the blue zone. That's no different right now. Let's go ahead and zoom it in on our most recent area where we see the market between the green and the blue. Last week we did take a short into the green zone. We saw profit as it approached the blue zone. Then it came right back up, and now here we are back at 117.95 again. So interesting here is the 100 period moving average right into the 118 level. So again, very similar but opposite of the dollar franc. The green zone is our major area. Underneath it, there's this tendency historically to go back to the blue zone. Anytime it gets back above that green zone, we could be looking for it to go back up to the purple zone. That won't change as we go down to the 4-hour time frame. The green zone is really the area that we want to focus on. I probably would say it's easy to see. You probably don't want to go long or buy right now. Just take a look historically. Resistance, resistance, resistance. So buying underneath 118 just doesn't seem like a logical scenario. The only real reason I think that you would even consider a buy is if it pushes back above the green zone. So buying right now, not really part of the scenario. Maybe an intraday sell if we get enough information about a bearish market here. Right now, there's no indication of bears being here for the euro dollar. So watch for that. Some clue that the bears, the sellers are here. Other than that, just don't go long right now under the green shaded area. GBPUSD, we've seen this somewhat in a falling channel. You can see the two red lines that we put there last week. We actually had an opportunity to have some significant profit here in the live trade room here as we took a short into the yellow shaded area. Of course, those shorts, if you stuck with them over the weekend, then you did not see the breakdown of the pink zone, so you may be out of them depending on how you played through with your stop loss. But we saw the attempt, the open underneath the pink zone today, but now here we are all the way back up into the upper 133. So the channel still remains intact. I would have liked to have seen a breakdown of 133.15, the pink shaded area. It just didn't do it. False breakout, didn't go down. Now we're right back up. So we could be looking for another opportunity to go short into resistance if the channel stays intact. Of course, the risk here is the break above that blue zone. If it gets above 34, 1.34, then we're likely looking for a little bit of a surge back into the mid to upper 134 is the yellow zone. So really, we'll watch this red line, the falling channel, the blue zone today for any new opportunities for the GBP USD. Let's move on over to the USDCAD. This is just kind of range bound right now. Nothing really exciting happening here. You see the bigger black box. Of course, that's the wider range going all the way back into October. We've seen it stuck inside this black box, but we even have a smaller area now. 1, 2, 3, 4, 5, 6, 7, 8 candle bodies inside that blue box there. Let's go ahead and zoom it in one more time. There it is. Look at this. Just kind of stuck. We saw a spike underneath thinking it was going to change and then turn right back around and came right back up. So very interesting there. I don't think buying right now seems like a very good idea. Logically, we're at resistance, so buying under resistance just doesn't seem like a logical scenario. Just look at history. So if you're looking for a long shot here on the dollar CAD, it needs to break through this 129, 129.10. It needs to get through that blue zone if you're looking for a long opportunity here for the dollar CAD. Otherwise, short possibly, yeah, but I would think if you're looking to go short, you want some evidence of selling pressure. And right now, it doesn't seem like there's enough evidence of selling pressure. So at least at this current point, I don't see an opportunity here. I would prefer to go long at the orange zone or above the blue zone. And I just don't see enough information to tell me that the sellers are even ready to drive it back down for the dollar CAD yet this week. Let's move on over to the US yen. Again, similar to the dollar franc, we've seen a lot of back and forth here on this currency pair. Let's just go ahead and zoom it in. Get tight in here. We saw a significant fall off all the way down to the blue zone, 112. Then a sudden turnaround, back higher again. Look at this purple shaded area, 112.45, 112.65. We've seen the market toying around with it for 1, 2, 3, 4 days now, just a little bit below it, a little bit above it. I would say right now, at least, what the price action says is you really don't want to go short right now. We have seen support here 1, 2, 3, 4 days now, holding above the 112.40, 45 level without any significant breakdown. I mean, we had challenges, we had tests, but it's still holding it. I would say this purple zone is your main area. If you're looking to go long, maybe back above 112.65, takes it back to the orange shaded area if we see some positive movement for the US dollar. If we see any negative movement for the US dollar back underneath 112.45, may lead it back down into 112. That's not an extraordinary distance, but definitely an area that we would focus in on if it gets back under the purple zone. So that purple shaded area, very significant for the US yen right now. Above it goes higher, below it we may see a little bit of a dip back down to the blue shaded area. 4-hour time frame, I don't think that'll change it much. You just see the market kind of around this purple shaded area. Just take a look at that, just kind of stagnant here. A little bit of a dip to 45, probably fooling some folks into going short right now. But unless it breaks 12.45, I'm not going short. I'm not getting fooled into this false move. In fact, if you look at this, we see, I'll just draw out a little circle of support here. And now we're testing that same support on the right hand side. So that's an interesting scenario. We may take a deeper look at that during today's live trade room. Take it on over to the AUDUSD. We saw the market take a significant dip all the way down into the 7,500 level, a significant rally. Now we're just kind of stuck for the past 3 days between the orange and the blue shade area. It's nothing new though. We've seen it kind of stuck in this area before, haven't we? Right here where the black blue box is underneath the blue shaded area. Look at all that resistance underneath 7670, 7690, 7700. Look at all that resistance right here. So I would say historically and factually, there's resistance at the blue shaded area. Not your best opportunity to go long under that blue zone. I mean, just take a look. If you tried to buy it under the blue zone back here, just a difficult scenario. So when do you buy it? If it's moving higher, when do you buy it? Well, you buy it on a break above that blue zone, 7690, or it takes a dip back down to the orange zone. Those are your really good opportunities to go long. Otherwise, not really there under the blue shaded area. 4-hour time frame doesn't really change it. Again, I don't think going long under resistance ever makes a good sense or a good idea. I would say at least right now it must break above the blue zone before you would go long again. Otherwise, maybe an intraday short into 7670. Keep an eye on the Australian dollar for opportunities around the blue shaded area. And lastly, the NZDUSD, it's a similar situation really to the AUDUSD, where we've seen a break of resistance, now just kind of range bound or bouncing around between resistance and support. 69.80.60 is the orange zone, 7,040 is the blue zone. Take a look back here, blue, green, and black circles. We're in between the orange and the blue zone all that entire period. So here we are again, right hand side of the chart. Let's zoom it in. So 1, 2, 3, 4 days now we've been above the orange shaded area, 69.80. Obviously going short on top of that just doesn't make a whole lot of sense. Don't go short on top of 69.80. That doesn't make sense at all. Only if it gets back underneath the orange zone would you think about going short. Blue zone, very interesting as well as a resistance target. Hasn't reached all the way to 70.40, so that's interesting too. If you wanted to put that 70.35 at the bottom of the blue zone, I don't think anybody's going to argue with you, but definitely 35.40, somewhere in there is that blue shaded area. That's resistance, so don't buy underneath the blue zone, or as it approaches the blue zone, don't buy it. Maybe at the orange zone to buy towards the blue zone. We did that once last week. No selling unless it's at the blue zone, resistance and reversal, or gets back underneath the orange zone for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.